Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video I'm going to be giving you a look at what I think are 5 of the best dividend stocks to buy and hold forever. And I'm certainly going to be buying and holding these stocks forever. I actually don't own all of these at the moment, so stick around to the end if you want to hear exactly why that is. But make sure to like the video to show your support and subscribe to the channel if you haven't already. And with that out of the way, I think we'll get right into the video. So the first company we're going to take a look at is the Southern Company, which is a utility company, and most of its operations are in the southeast US. So like they say on their investors page here, they have electric utilities in 4 states and natural gas distribution in 7 states, and they also provide wholesale energy and energy solutions and fiber optics across the country, as well as wireless communications. So they're mostly focused on the utilities, but they also have some other businesses as well. So they have these electric utilities in Alabama, Georgia, and Mississippi, and then some some natural gas utilities throughout the southeast portion of the country, sorry. And then they also have these other companies that are in their other operations, I guess, or their other businesses. So they're really a diversified company, in my opinion, and they have a lot of different things they're working on. But one of the biggest things they're working on right now is their 2 new nuclear power plants, which they're actually not completely owned by the Southern Company. So as I showed, there was one of their utility companies is called Georgia Power, and Georgia Power basically owns about 35% of these Vogtle nuclear power plants, which they're building 2 more of. And it says here that units 3 and 4, which is the ones they're building, are projected to be done by November 2021 and November 2022, respectively, which was the original end date goal. And that's important because it basically is saying that it's still going to be done on time despite the impacts of COVID-19, because there were some I think there were some outbreaks there on the construction sites and such, so they had to slow down or stop some of their work. So it's good that they're still going to be on track. I think they had some buffer time in there for sort of emergencies like this, so that's good that that happened. Unfortunately, there were some increased costs of about 150 million so far, and there could be some more costs in the future that were unforeseen, but I think overall these are going to be a great addition for the Southern Company. And these actually power plants are the first nuclear power plants built in the US in 20 or 30 years, I think. So for me, I think that's a really great thing. I think nuclear power is very good for our country and a great way to get some energy. So I think that's great to see that they're working on that. And also, actually, a few days ago, they actually received their first shipment of nuclear fuel, which just sounded kind of cool, I thought. So I wanted to include that here. So that's basically Southern Company. I definitely would encourage you to do some research into it. I definitely didn't talk about that financials at all, but I just wanted to give an overview of what they do and what I'm looking for in the future with this company. So the next company we're going to take a look at is Johnson & Johnson, and they're a diversified healthcare company. And one of the great things about them is they've actually been increasing their dividends for over 50 years, which makes them a dividend king. I think they're around 56 or 58 now, somewhere in that range. But they basically have 3 reportable segments in their business, which is consumer health products, which is a little bit less than 1/3 of their revenue, I think. And then medical devices, which is also about 1/3 of their revenue. And then their pharmaceutical products, which is about a little bit over 1/2 of their revenue. So all of these are pretty strong. I think actually from the Q3 results, the pharmaceutical and consumer health segments had increases year over year for their revenues, but the medical devices was actually down a little bit. But I think that makes sense because of the coronavirus. A lot of surgeries and stuff like that were postponed or canceled and kind of pushed off because the hospitals were filling up with COVID patients. So I think that medical devices, a drop in sales makes sense for that. But I think definitely in the future, as we see those procedures start to rebound and people starting to get those procedures done, then those sales will definitely pick back up, I think. So I wanted to look at some of the products that they have in there. They have skin products, which I've heard of Neutrogena. I hear a lot of ads on the radio or Spotify or something for them. So, but I don't really buy any skincare products, so haven't heard of any of these. But they look good, I guess. And then they have a lot of other self-care products, Tylenol, I mean, Motrin, Benadryl, everyone's heard of all of these. So I think those are great that they have these, and they also have some other products like Listerine and Band-Aid. I mean, they have tons more products. These are just some of their top products, I think. But overall, Johnson & Johnson just has so much revenue from so many sources and so many products that I think it would take something crazy to really hurt them in the long term. Obviously, they're not growing their business super rapidly, but they have that super solid foundation to continue paying that dividend over time and continue increasing it. So I think that's going to make for a great investment. So the next company we're going to look at is PepsiCo, and if you guys have been following me for a while, or if you know anything about my portfolio, you probably know that I actually don't own them. I do own Coca-Cola, but overall I think Pepsi is a little bit of a better company, but I'll get into that a little bit at the end of the video. But the reason I like Pepsi a lot is they just have so many different products, just sort of like Johnson & Johnson, you know, and they have a super solid history of selling these products and paying those dividends, which we're going to look at in a second. But you probably recognize pretty much all of these brands, and they actually partnered with Starbucks a few years ago to create some canned drinks or bottled drinks, which is pretty cool. But they just have all these drinks, and a lot of them are, you might argue, are unhealthy, but they also have a lot of brands that are focused on health and wellness and just being a little bit more healthy and conscious of your decisions when buying and eating food, I guess. So I think there's a big movement toward that, and I hope for the sake of just the health of people that movement continues, and Johnson & Johnson Pepsi can hopefully capitalize on that and kind of sell even more of these health food products in the future. And then I also want to look at their dividend history because they are almost a dividend king. They've been growing it for around 48 years, and the one thing that's better about Pepsi, in my opinion, is the growth rate. They've been growing that dividend a little bit more quickly than Coca-Cola. Though the dividend yield, I believe at the moment the dividend yield of Pepsi is lower than Coke, but for a long-term investor and someone young like myself, that growth rate is really a lot more important in the long term than the dividend yield. So the next company I'm going to be including in this list is Realty Income, which is a real estate investment trust, and they actually pay monthly dividends, which is sort of attractive to a lot of dividend investors, but it's my firm belief that you should not pay attention to when a company pays out. It just happens that this company is what I believe to be a quality company, and they happen to pay out every month. So I guess that's sort of an added perk, but it really should not be on your radar at all when deciding what companies to buy. So I actually want to look at some of the financials here because I really like about this company is, see here, these are some data from 2014 to 2019. So they have listed their number of properties, and this is increasing a ton. So if you look from 2014, they only had around 4,000 properties, and now they have around 6,000. So that's like a 50% increase in just 5 years, which is fantastic in my opinion. And then with that, the number of square feet that is leasable is increasing. The number of properties they acquire each year has really been increasing in the last few years, so that's good to see. And then also their occupancy rate has been steadily around 98%, even a little bit above 98%, and they honestly have been doing fairly well in the pandemic with people paying their rent. I think as of the last few months, they've been getting like 95% of their rent on time, or maybe even a little bit better than that, which is really good, I think, even in good economic conditions. So I think that's great for them. And then if we look at some of their tenants, these are their top 20 tenants by the percent of their rent revenue annually, basically. So they have like Walgreens, 7-Eleven, Dollar General, FedEx, a lot of companies here. The ones that are a little bit concerning, obviously, are the theaters, Regal, and AMC. But I think after the pandemic ends, hopefully within the next 6 months or a year, I think these companies will rebound because people will want to get out, I believe. And also I wanted to look at over here, they have a breakdown by industry of their different rents, basically, that they have rented out, or the different properties, I guess. So they have all these industries, but the important thing I want to look at is US. Most of their business is in the US, 95.6%, but as you can see, just a few years ago, 100% of their business was in the US, and they're actually expanding into the UK recently. So I personally think that that's a great sign to be expanding into the UK. So I do like that, and I hope they can expand even more in the next few years, and I'll be looking forward to these numbers when they come out at the end of 2020 to see what they look like. And so the final company I want to look at is 3M, and they are in the industrial sector, and this is another one in this list that I personally do not own in my portfolio at the moment. So I just want to look at some of their products because they just have so many products in so many areas, and they have so many innovative products, that they've introduced throughout the years, like the Post-it note. That was a 3M invention, and especially with the pandemic and the masks, they produce a ton of masks, and I think that's been a real help to them and just boosting their brand awareness because everyone knows now that they make the masks. So I think that's pretty cool. So they just have all these different kinds of brands, and actually I thought that was interesting that this panel bonding adhesive came up on the first page. It might be because I was searching for it at one point because we were actually used this on the 1970 Challenger that me and my dad are working on restoring. So I thought that was kind of funny that it showed up right here, but they have all these masks, and if actually what I wanted to look at was on the left here, they have the categories of products. So all these different categories: abrasives, adhesives, aerospace, animal care, architecture, automotive products, car and boat care, chemicals. And I mean, it would take me a while to read off all of these different segments, I guess, or different types of products they have. So I think that's just really cool that they have so many products in so many different areas. So even if maybe for some reason some of these products they don't sell much at one point, or sales for some reason go down, I mean, they still have all those other products to help them and boost their revenue over time. So overall, they're just a super solid company, and they are also a dividend king. I think they've actually been increasing their dividend over 60 years, which is just crazy. That's like more than 3 times my whole life. So I mean, that's pretty interesting to think about, and I think they're a great company, but definitely do your own research. Alright, so those were 5 of the best dividend companies that I think are out there at the moment. If you guys have been paying attention at all to my portfolio, you probably would say that I only own 2 of those in Johnson & Johnson and Southern Company, but I actually own Realty Income as well. I own that in my Roth IRA, which is just a tax advantaged account. So I think that for me, it might be a little bit better to own Realty Income in my Roth IRA because there are different tax implications for how the dividends from a REIT is taxed. So that's why I'm doing that. So the other 2 companies are Pepsi and 3M. So I don't own those at this point. And basically the reason for that is I'm just trying to build up my current positions out to sort of a sizable position. So maybe it's just a mental thing, but for me, I just don't like having like 0.3 shares of a company. I would rather have a few full shares. So at this point, instead of buying new companies, which in the future I think I'll buy some additional companies and add them to my dividend portfolio. But at the moment, I just want to build up the current positions I have to maybe at least a few shares each. So obviously with only right now it's at like $1,000 portfolio, you really can't have multiple shares of a company that trades at $150 like Johnson & Johnson and Pepsi and 3M, because that's your whole portfolio at that point. So in order to diversify and have around 20 companies, you have to have a lot less than a share of all of those. So these are the 5 best dividend stocks I think exist at this point. So if you guys have any different thoughts, definitely leave them in the comments below. And if you are interested in maybe buying these stocks, definitely do a lot more research because I definitely did not show you everything you need to know before investing. So the quote of the video is, "The best time to plant a tree was 20 years ago. The second best time is now." And usually this is said that it's attributed to a Chinese proverb that basically the origin is unknown, but I actually did some research and it turns out that it's probably not actually a Chinese proverb. So, but the source is still unknown, but I think it is a good quote and it definitely relates to investing because there's oftentimes opportunities that we may miss in investing, and that sucks, but it's okay. You just got to move past it and work to find the opportunities now and not worry about those opportunities you missed in the past. So that's what I got out of the quote. I thought it was super interesting, so I hope you guys enjoy this video, and I will see you in the next one.